Singapore investors, listen up! Yangzijiang Shipbuilding just announced its first half 2025 results on the 6th of August, and the numbers are, honestly, mind-blowing. We're talking record profits, record margins, and a dividend yield that could really make income investors smile. But here's the big question. Is YZJ still undervalued today or, well, has the ship already sailed? Stay with me till the end of this video because I'll break down YZJ's business, its 2025 financial results, dividend history, free cash flow, and future prospects, and most importantly, whether I think YZJ Shipbuilding is a buy or hold for Singapore income investors. Before we dive in, please give this video a like so more Singaporeans can learn about dividend investing, and don't forget to subscribe to Wealth for You for more REITs, banks, and dividend stock breakdowns. Oh, and a quick note. All YZJ Shipbuilding financial information here is obtained directly from the SGX website, and this video was specially requested by a viewer of this channel. Disclaimer. This video is for education and information only. It is not financial advice. Always do your own research or speak to a qualified financial advisor before making investment decisions. Now, let's get started. Chapter 1. What is dividend investing? Now, before we dive into Yangzijiang's results, let's quickly refresh on what dividend investing means. Instead of only chasing stocks that go up in price, dividend investors look for companies that pay us steady income while we hold the shares. Think of it like planting a money tree. Every year, or sometimes every half year, you get to pick fruits, the dividends, without chopping down the tree. For Singaporeans, dividend investing is especially popular because it gives you passive income to cover expenses. It helps you stay cash flow rich, not just paper rich, and it can complement CPF and other retirement savings nicely. All right, with that in mind, let's see how YZJ Shipbuilding is doing as a dividend-paying stock. Chapter 2. What does Yangzijiang Shipbuilding do? So, who is Yangzijiang Shipbuilding, or YZJ for short? They're one of China's largest non-state-owned shipbuilders, and for us in Singapore, yes, they're also part of the Straits Times Index, making up about 1.99% weight. So if you own the STI ETF, you already own a little slice of YZJ. Their business has three main parts. 1. Shipbuilding. This is the heart of YZJ. They build container ships, bulk carriers, oil tankers, and increasingly clean energy vessels like LNG and methanol dual-fuel ships. In fact, about 3/4 of their order book today is for green vessels, a big strategic shift as the shipping world moves toward decarbonization. 2. Shipping. YZJ also owns a fleet of 33 vessels, chartering them out for income. This segment provides recurring cash flow, but it's more cyclical since it depends on global freight rates. 3. Other businesses. Things like trading raw materials, ship design, and an LNG terminal under construction. These are interesting, but they're relatively small compared to the giant shipbuilding arm. Now, a quick but important clarification. Don't confuse YZJ with Yangzijiang Financial Holdings, or YZJFH. That company was spun off in 2022 and focuses on investments, debt products, and financial services. YZJ Shipbuilding is the core industrial business. Two different listed companies, two very different focuses. And just to be precise, while YZJ traces its roots back to 1956, its modern growth as a privatized shipbuilder really took off in the 2000s, leading to its Singapore listing in 2007. That's when it became the YZJ we know today. Chapter 3. 1H 2025. Financial Highlights. All right, let's dive into the numbers for the first half of 2025, which ended on 30th June 2025. YZJ's revenue came in at RMB 12.9 billion, which was basically flat compared to last year, just a 1% dip. At first glance, that might not sound exciting, But here's where it gets interesting. Despite revenue holding steady, profits soared. Net profit jumped 37% to RMB 4.18 billion, hitting a record high. Their gross profit margin expanded to 34.5%, also a new record, and return on equity climbed to 30.1%, up from 25% previously. That means YZJ is squeezing a lot more profit out of every dollar of sales. Breaking it down further, the shipbuilding segment was the star. Margins leapt from 26% to 35%, powered by cheaper steel prices and the smooth, profitable delivery of dual-fuel container ships. The shipping business, on the other hand, was weaker. Revenue dropped about 15% because charter rates softened. Nothing YZJ could control there, and their joint ventures and associates gave them a nice boost, contributing RMB 481 million, with RMB 160 million coming from their fresh investment in Tsuneshi Joshan. So even though sales didn't really grow, YZJ delivered record-breaking profitability. In short, this is a story of efficiency, smart contract execution, and cost discipline paying off in a big way. Chapter 4. Is YZJ overvalued or cheap? Now let's talk about valuation. Is YZJ overpriced, or are we looking at a hidden bargain? At today's levels, Yangzijiang's market cap sits around 11.3 billion Singapore dollars. Its price-to-earnings ratio is just about 8 times, which is actually cheap compared to many other STI stocks that often trade well above 10 to 12 times earnings. On a price-to-book basis, YZJ comes in at roughly 2.3 times. That's not exactly dirt cheap, but when you consider their return on equity of over 30%, it looks very reasonable. You're paying a fair multiple for a company that's highly efficient at generating profits. And let's not forget the balance sheet. With a gearing ratio of only about 22%, YZJ is sitting comfortably with conservative leverage and a strong net cash position. That gives them stability even if the industry hits stormy waters. Here's the kicker. Analysts peg the fair value closer to $4 a share, compared to the current price of around $2.80. That's a pretty wide gap, and it suggests YZJ may not just be fairly priced. It could actually be undervalued, giving investors both income and potential upside. Chapter 5. Dividends and Yield. Now let's get to the juicy part that income investors love: dividends. In the past 3 years, Yangzijiang has been stepping up big time. In 2023, they paid 5 cents per share. In 2024, that rose to 6.5 cents. And in 2025, investors got a bumper 12 cents dividend. That's more than double in just 2 years. Not bad for a so-called boring shipbuilder. At today's share price, that works out to a trailing yield of around 4.2%. And if they maintain the same payout going forward, the forward yield is also about 4.2%. For a large cap STI component stock, that's pretty attractive. But the big question, is it sustainable? Well, here's where things get reassuring. The payout ratio is only about 38 to 40% of earnings, which means they're still keeping more than half their profits inside the business for growth and a rainy day. And if we look at free cash flow, the story gets even stronger. In financial year 2024, YZJ generated more than RMB 12 billion of operating cash flow, almost double the statutory profit. Even after accounting for investments and capex, they still had plenty of cash left over. That's why funding a 12 Singapore cents dividend is no stretch at all. Looking ahead, the combination of a massive $23.2 billion order book and a conservative balance sheet gives them visibility and cash flow strength for years to come. In other words, unless something drastic happens in the global shipping market, YZJ's dividends look well supported, and there's even room for gradual growth in payouts. Chapter 6. Critical Evaluation. So, after looking at the numbers, what's my honest take on Yangzijiang's performance? On the positive side, it's hard not to be impressed. The company delivered record profits and record margins, showing they're running a very tight and efficient operation. Their balance sheet is rock solid, with about RMB 18 billion in net cash and very little debt. That's like having plenty of fuel in the tank while still cruising smoothly. The order book is massive, about 23.2 billion US dollars. And here's the kicker. Around 74% of it is made up of green vessels. That means they're not just building ships for today, but also future-proofing the business for the global decarbonization push. Add to that a strong track record of dividend growth, supported by healthy cash flows, and you've got a company that ticks many boxes for income investors. But of course, it's not all smooth sailing. Revenue actually dipped slightly in the first half of 2025, which shows that future growth depends heavily on winning more contracts. The shipping segment was weak, dragged down by lower charter rates, and that side of the business is always going to be cyclical. Another concern is that new order wins in the first half were only about 0.54 billion US dollars, quite a bit below their annual target. With trade tariffs, slowing global growth, and geopolitical uncertainties, there's always a risk that demand for new ships could soften. So, in short, operationally, YZJ is firing on all cylinders, but investors still need to keep an eye on external factors, like the global economy and order flow, because that's where the real risks lie. Chapter 7. Future Prospects. So, what lies ahead for Yangzijiang Shipbuilding? The company has something every contractor dreams of: visibility all the way through 2029. With a 23.2 billion US dollar order book already in hand, it's like having your calendar fully booked with projects for the next 4 to 5 years. That kind of certainty gives both management and investors a lot of comfort. On top of that, YZJ is actively investing for the future. The project Hongyuan Yard, with about RMB 3 billion in capex, is on track for completion by end 2026, with its first vessel expected in 2027. This will expand their capacity and open the door to more high-value shipbuilding. Alongside that, there's the LNG terminal and storage facilities, another RMB 2 billion project, also targeted for 2027. These are not just side ventures, they're strategic moves to diversify income and ride the wave of global LNG demand. And then there's the industry backdrop. The IMO's decarbonization push means that demand for greener, cleaner ships is only going to increase. With nearly 3/4 of YZJ's current order book already green vessels, they're positioning themselves right in the sweet spot of this transition. Of course, it's not all smooth waters. In the short term, order wins could be a little slower because of tariffs, global trade uncertainties, and cautious shipping companies. But if you zoom out, the long-term story looks strong. YZJ is building not just ships, but a future-proof business. Final thoughts. Buy or hold? So, is Yangzijiang Shipbuilding a buy or a hold for Singapore income investors? Looking back at what we've covered, record profits, record margins, a rock-solid balance sheet, and a massive green-heavy order book. The fundamentals are very strong. Add to that a healthy dividend track record, supported by free cash flow, and valuations that still look cheap with a price-to-earnings of just around 8, and the case for YZJ looks compelling. If you're an income investor looking for stable dividends with room to grow, YZJ really does tick the boxes. A healthy payout ratio that leaves a buffer for reinvestment. A forward yield above 4%, which is pretty attractive for a large-cap STI stock, backed by strong free cash flow and multi-year revenue visibility, and valuations that suggest undervaluation, with analysts' fair value estimates higher than today's price. My verdict? Buy for income, hold for growth. This isn't a get-rich-quick stock, but for those of us who prefer being cash flow rich rather than paper asset rich, YZJ fits beautifully into a Singapore dividend portfolio. Alright, that's the full breakdown of Yangzijiang Shipbuilding's first half 2025 results. So, what do you think? Are you picking up YZJ for its dividends, or waiting to see if they secure more order wins? Share your thoughts in the comments below. I'd love to hear from you. If you found this video useful, please give it a like so more Singaporeans can learn about dividend investing. And don't forget to subscribe to Wealth for You. Hit the notification bell so you won't miss the next breakdown on REITs, banks, and dividend stocks in Singapore. Thanks for watching. And as always, remember, stay cash flow rich, not just paper rich.